So swing trading stocks using Confluence. So one of the biggest things for me, and this is Apple stock, so it's a good mover, but it's trying to find that confluence of technical analysis that allows you to get in a really good, strong move, but then be able to get out. Remember, swing trading isn't investing. So I'm going back to the beginning of 2023 because this was a big move, and it does happen on lots of stocks. So I'm combining harmonic patterns, but also the xBrat algo to give me that sort of confluence with momentum to get in these trades. I'm also using the Bias Depth Heatmap in a way to give me confirmations, but also to deny potential shorts, that sort of thing. So the first thing I want to talk about is this butterfly pattern that's colored in red did not complete in the automated completion zone, which the software gives. That means it failed. So the short, even though it did go down, it wasn't a really sort of big move. But then we had the crab pattern here, colored in green, A, B, C, D, completed in the automated completion zone. For this to happen, it is not regular. Okay, so when this happens, we must take note that there's a lot of confluences for this D pivot to complete in this automation completion zone. I'm not going to go into too technical how the software works it out, but there's lots of fib overlaps, extensions, retracements and all that sort of thing. So it's the prime spot where that D pivot should find, and then the resulting trade should be up here. But I don't trade as soon as we move away from the D pivot. What I need is confirmation from the xBrat algo. So what we can see here is an xBrat algo is actually a confluence signal tool, and 4-star buy means there's 10 out of 12 confluences to give us that signal. 5-star is 11 out of 12, and 6-star is 12 out of 12. So initially we understand the market condition, the behavior with the harmonics completing in the completion zone. Then we're looking for confluence with this signal strategy here, and we get it. If we want to go long early on the 4-star, that's our choice. We can do that. If we wait for a 5-star, again, that's our choice. We can do that. Or if you want to wait for that 6-star hotel, you can do that as well. Will always be some sort of resistance at these previous pivots where this butterfly pattern started. You can see left here, if you move along, we can see there was initial resistance there. That's fine. We understand that will happen. The pullback, however, from there, using the manager, the xBrat manager, was pretty much, you see the dots underneath these. This is a 195 minute. Why am I using that? There's exactly 2 candles in a trading day of 195. We can see the down moves on this pullback. The dots underneath say it's lower than average volume, so not to panic. Okay, and in this situation, also on the manager, the ribbon is now green, and we're good to go. At this point, we get another 6-star buy signal after this pullback. This is, so let's go back. When we're getting in early here, the Bias Depth Heatmap's 4 out of 6 for green. That's good for me because we're basically looking at a reversal from a previous bearish trend. If we're now going to add to our swing position, so add some more shares, when I get a 6-star buy at this point, all 6 time frames in the Bias Depth Heatmap on the swing trading setting, we can see down here, heat map swing trading, need to be all green. Okay, that gives me confidence to add to my position. And that's the main important thing here, is we understand the confluences. We got in this move early. We've used the manager to understand that this pullback is a profit-taking pullback with little volume, and then it goes again. Then we get the 6-star buy signal, the Bias Depth Heatmap, all 6 out of 6. We're going to add to that position there. And this is how we went basically all the way through May, June, and then coming into earnings here, we start to see some moves down. So for me here, we get a higher than average volume because the dot's up above candle. Okay, this is the manager telling you actually sell off, well, not sell off, but a heavy profit taking will happen here. Remember, all those other profit takings we see here with just one candle wonders with higher than average volume. Okay, again here, lower than average volume. This is the first time we see higher than average volume, higher than average volume. Okay, for me, two candles to the downside, higher than average volume means this thing's going to come down, quite a lot. And we're just coming into earnings. There's that confluence of higher than average volume profit taking just before earnings. Somebody knows something. Okay, so that's when we get out of that position. So that whole trade was basically from Jan 2023 to August 2023, and we have let's measure that move. So let's say we got in on the 5-star there because we're reasonably aggressive, and we got out on this candle, second candle here with the higher than average volume. That's a 40% move. That's a good swing. And again, it's 10 months, 9, 8 months, whatever it is. It's a good opportunity. We can see then we pretty much going sideways. We're getting signals to go long. Nothing's really petering out. But all of a sudden now we get a catalyst of the next earnings. So in between earnings here, we do get some reasonably good signals, but we don't get many confirmations. But here, we're always looking for confluence. So we get the signals reaction after the 5-star, but then we get a 6-star buy signal. So this is reaction now from earnings. All 6 time frames are green. So let's look at the confluences here. Earnings reaction, 6-star buy, which is 12 points of control out of 12. And then the third confluence is that bias depth heat map. We can go long here. Okay, really good. Then we get signs to take the profit, and look where that profit's taken, pretty much near the highs again. And then we move forward. We can see another earnings reaction at this point. And hey, lo and behold, there's another crab pattern form at this point here, just after earnings. And then we have these long moves up. It goes sideways for a bit, but we're not taking a stop out. We get more 4, 5, 6-star buys at this point, and we go long at this point. And then look what happens here. Higher than average volume down candle. Higher than average volume down candle here. This is starting to take effect. It's starting to move down. Get out. Now we're just coming up to earnings again at the end of January 2025. We've just printed a 5-star buy signal. Look at the bias depth heat map, pretty much all green. We need to wait for the earnings reaction. If we print a 6-star buy, we're going to get in Apple. Okay, so hopefully that helps. It's about the confluences. For me, when I'm swing trading stocks, some of the basics I use is the harmonic pattern, and I also use the xBrat Algo to give me the signals, the bias depth heat map. The links for these indicators for the TradingView platform and others will be below this video. So for those swing trading stocks, this is a confluence strategy that should not be ignored.